to tonight's fireside discussion. My name is Jason Kenwell. I'm actually the head of capital here at VentureCrowd. So thank you very much for joining us. For those of you that don't know, VentureCrowd is actually a digital investment platform that specialises in alternative asset investments, specifically venture capital and property development. And we make those available to both retail and wholesale investors. Currently, we have over 73,000 registered members who have invested over $310 million with us. More than half of our investors actually are repeat investors, which we're very proud of, as we continually bring solid opportunities to our crowd. One of the reasons for that is that we're a purpose-driven business. We back businesses that share our goals for a more sustainable and purposeful future. That means we only work with companies and projects that have purpose at their core. And the way we assess that is by ensuring that each company that we have on our platform meets one or more of the UN, or United Nations Sustainable Development Goals. The Sustainable Development Goal for this project that we're discussing tonight, Carrara, is SDG number 11, Sustainable Development Goal number 11, which is sustainable cities and communities. If you'd like to find out more about that on our website, just pop to the venturecrowd.com.au, and if you hover over property at the top, you'll see that Carrara comes up there. That'll take you to the deal page, and you'll learn obviously more about that as we go along tonight. Please feel free, you can invest at any time during this fireside chat as well. There's nothing stopping you doing that as we go through if you wish to. Do remember that you can ask questions during this chat. We have a little Q&A button at the bottom of your screen there, so feel free to drop your questions in there. We will allow plenty of time tonight for our panelists to answer those questions directly for you towards the end of the webinar, so we'll allow plenty of time for that. I'd also like to know, just to let you all know, that tonight's discussion is of a general nature and your personal circumstances have not been considered. Please do seek personal financial advice before making an investment decision. The Carrara investment offer is actually open to certified wholesale investors and pre-approved investors only. Now I'd like to actually introduce our panelists this evening. Tonight I have David Whitting, who is the head of property here at VentureCrowd, along with our senior development manager, Brad Beh. Welcome to both of you, gentlemen. It's good to have you here. As an introduction, I'd like to ask David to start off the evening to outline the property division of VentureCrowd, the types of assets that are being targeted and the rationale behind the strategy. David will then get Brad to speak directly to the Carrara opportunity. Over to you, Dave, if you'd like to unmute yourself.
Thank you, Jason, and welcome to everybody tonight. Thanks very much for joining us to hear about this exciting project of ours at Carrara. So in the last few years, VentureCrowd has been specifically targeting development projects that not only fit the criteria that Jason's been talking about, but of course fit the investment criteria demanded by our investors for quality projects, quality product, and risks that can be managed in the best manner possible in this environment. So we have been looking at the traditional development types of residential assets that VentureCrowd is traditionally known for. And currently, I can say as well, looking into the future, we're looking at also some other exciting opportunities in the environmental space, related to property, of course, piggybacking off the move to sustainable energy. And we're also looking at a small commercial opportunity as well, which we will be happy potentially to tell this group about later. Nevertheless, going directly to our particular property, I'll get Brad to give us a bit of an update on the Gold Coast market more generally before we jump into this asset specifically. So Brad, can you give us a bit of a recap of on the Gold Coast market and what you're seeing down there at the moment?
Thanks, David, and thanks, Jason. Look, one of the things I will start with in this webinar is probably the fact that at present, there are around 36,500 starts per annum in Southeast Queensland, which is just simply not enough to cater for the underlying demand. In particular, areas like the Gold Coast are significantly undersupplied. At current estimates, the Gold Coast is building somewhere between 30% and 35% fewer new dwellings than are needed to meet the current and future demand. And as a result, the rental vacancy rate remains tight and rents plus housing prices continue to rise. But one of the biggest things is the shortage of new builds, lifting land prices across Gold Coast's urban footprint, which is resulting in fewer new detached houses being built, which really slots in, where Carrara is positioned. So, look, alongside the changing demographic needs and lifestyle wants of the local residents, look, the rise in development land values has seen dramatic increase in the demand for new attached dwellings, and particularly well-designed, well-positioned and appointed apartments and semi-detached dwellings like we have at KYRA. Look, there's obviously a significant amount of high-rise developments that are underway, but again, one of the issues that we're seeing now is the rising of construction costs means that a lot of those projects are just never going to see the light of day and come to fruition over the next 5 to 10 years.
Yeah, thanks, Brad. So one of the things that I saw today was some information from Michael Matusik, which was really interesting in relation to the number of starts of high-rise apartments on the Gold Coast over the next couple of years. And I'll look for it very quickly now because it's extraordinarily telling about where the state of the construction market is as much as the demand. So construction delivery estimates for towers on the Gold Coast for 2023 is 23. Next year is 51. In calendar 25, it's 9. And calendar 26, it's 4. So what that information is really telling me is that unless you're under construction now, a lot of the big builders are just not taking the risk on large towers now. So, it's the question for us, luckily with our development is, where is that going to demand? Where is that demand going to be housed in terms of product? Because certainly the price points that we're talking about, are equivalent to some of the lower price points in some of those apartment markets that are not on the beach, but certainly at the back of the beach. So so in terms of the Gold Coast now compared to its history, what's different about the developments today compared to say 20 years ago on the Gold Coast?
Well, obviously, the high-rise development sphere has become a lot more sophisticated, and obviously the projects are a lot larger. So, but again, that goes back to the spend on those apartments being 10,000 to 15,000 a metre to deliver, and the prices are just astronomical. So, I think what you're seeing is a lot of those old towers being demolished and new ones coming along, but because of the infrastructure boom with the Olympics, in 2032, we're seeing a lot of those major tier 1 builders taken away from the Gold Coast and headed towards Brisbane, as you said, for the safety of government-backed contract work. Yeah,
indeed. And one of the things I think we kind of we touched on internally in looking at this project is, there's a demographic wall coming towards the Gold Coast, and that is effectively the boomer retirement market. And I think probably on the Gold Coast, that will be seen, well, not only now, but over the next few years, probably in greater percentage numbers than almost anywhere else in Australia as the home of retirees from down south, and indeed overseas investors and things like that attracted to that market. So one of the things that automatically kind of comes off that is how do you what are the trends in sustainable urban development? How does this relate to the Gold Coast, and how does our project fit into it, I guess?
Well, the Gold Coast is one of the most biodiverse regions in Australia, and the city is naturally unique, defined by spectacular beaches, hinterland ranges, forests and waterways, and I guess a celebration of nature. approximately 50.55% of the city's land area is covered in native vegetation. And that's one of the aspects, obviously, at Carrara that we're going to be touching on as we go through the highlights of the project.
Okay, so what are some of the other drivers that are driving the types of development and the design of the development on the Gold Coast, and some of the things that we've incorporated into Carrara?
Yeah, sure. Well, over the next decade, the City of the Gold Coast is focused on delivering projects that restore our environment, protect our precious wildlife and their habitat, and provide more experiences for people to enjoy nature, including working towards their target of 51% native vegetation cover, purchasing land to secure strategic habitat and connect critical nature corridors, which KYRA ticks all the boxes, and designing city growth to protect the natural environment and understanding and responding to climate impacts for land and water environments. So, the state government is committed to this as well. And then, look, there's more and more highly economic and highly environmental sensitive zones, as well as koala vegetation being footprinted throughout the urban footprint of the Gold Coast and all across southeast Queensland as part of this.
Sure. So one of the things that we're seeing in the news, obviously, is security. We identified that as a major driver in our design and our design brief to the architects. So how does Carrara meet the security requirements of not only, I guess, an aging population that is particularly worried about that, but also obviously the crime rate that we're seeing at the moment?
Well, I guess Carrara, the site at 17 Baltimore Court, is such a tremendous development opportunity because rarely do elevated parcels of this size, 23.88 hectares in total, which will yield 59 dwellings, but set at the end of an established neighbourhood. So you've got instant security because you're driving through an established neighbourhood with families living there. And a lot of focus groups that we've done in the past have really highlighted the fact that gated communities are highly rated and sought after by intending buyers. So, there's a bolt hold aspect to this project because the peninsula that KYRA is going to be built on is secured and inaccessible from the extremities, for many, many hundreds of meters, surrounding it. So, thieves would have to sort of venture through, thick environmental zones to actually make it into the development, which is, pretty much there's creeks and gullies and whatnot. So it's a very unique opportunity.
So let's talk about Carrara generally and a little bit about the history of the project and why we picked it up, and the branding exercise that we've gone through and the design exercise that we've gone through.
Yep, sure. Well, as I said, there's 59 luxury villas. I call them houses because whether they're semi-detached in 4-packs or duplex pairs or standalone, they are luxury houses, starting from just under 200 square metres for a Type C, but all the way up to 257 square metres for the Type B, at an average size of 244 square metres. So that's not a townhouse; it's a house-sized project. So. Carrara is located 70 kilometres southeast of Brisbane CBD and approximately 9.75 kilometres by road from the beach. It's the geographic centre of the Gold Coast, and it's a well-established suburb benefiting from extensive resident amenities. The site offers easy access along Hickey Way to the M1 motorway and key arterial roads such as Nielsen's Road that connect into the nearby neighbourhood centres. Our site comprises 2 lots. As I said, 23.88 hectares will be rehabilitated and on completion transferred to the council and dedicated as a public conservation area. Within the development area, we've got a further 7,993 square metres of the total 38,590, which will be subject to an environmental covenant and will be for the sole enjoyment of the residents. And look, despite losing much of the site, what remains is the highest portion and one that affords excellent views to the northeast and south. And I've always had a saying in development, Dave, as you know, any view is better than no view at all. And we've got the Gold Coast skyline as part of the view, and we look up to the hinterland into the Mount Tamborine and surrounds. So it's got the best of both worlds and just that really open feeling of no neighbours around you. So townhouses typically have a back courtyard and then a fence, and that's what you're looking at. KYRA has elevated homes, circling around the peninsula and looking out into those lovely views.
Yeah, sure. And there was a fair bit of stats in there in terms of area, but effectively what residents will get is effectively like an English common, where there'll be walking paths in land that effectively is dedicated back to council in some respects, part of the body corporate in others. And they'll be living on top of a ridge, looking down at all of this kind of grassland and walking parks and things like that. And maybe, Brad, you can just tell me a little bit about kind of the health and well-being and pool area that we've planned to be part of this as well.
Well, the communal area, as we're calling it, is the recreational centre, and it's a significant pool with inbuilt day beds, barbecue area, yoga spot, and just looking out towards that skyline. So the residents will really feel like they're living in a luxury resort, albeit with someone else having to come down and clean up the barbecue and the surrounding the pool area and maintaining that area. So it's a significant expense to it, but I think it's seen as one of the necessary luxuries that this type of product can enjoy. So you're in a gated resort with common facilities, and then you've got the ability to feel secure in your own home and a sizable home at that.
Sure. So we might go on to the product a little bit that we're raising now. So perhaps you can take us through a little bit about this product and what it's going to be directed towards. So obviously we've raised about $10 million already on this to acquire the land, to get the development approval. We were able to increase the approval from the initial 58 to 59 houses. And let's talk about, the next 6 to 12 months that this raise is being directed to and what it goes towards.
Yeah, sure. So Dave, we're basically in the final throes of our design of civils and preparing to lodge our operational works approval, as well as gaining our building approval, known as a BA. So this raise of $6 million is sort of looking to commence on the civil program and also commence on a pre-sale program to underpin the values that we've assumed in the feasibility, which spits out these numbers that we're talking about tonight. Look, one of the big things I guess I'll touch on is that we've had an independent report from Paul Broad Research and Advisory, or Broad Property Research and Advisory, as he calls himself. And Paul's numbers are a touch over 1.6 average, and we are only assuming in our feasibility that we're at 1.5. So that, at 59 dwellings times an extra $100,000, there could be significant upside in this project. The way we are designing this to obviously de-risk it by seeking pre-sales, as well as commencing our early works and civils to start the progression of the development.
Sure. And it's important to point out that the 30% profit share that we forecast for investors in relation to this round is based upon those lower average figures. Absolutely. So if we can outperform on that and achieve the target prices that Paul Broad is forecasting, and that they're current, and so we would hope that as we sold over the next 6 months, that perhaps even his 1.6 might grow from there. So we would look in our usual fashion to get some away early at reasonably good prices, and then to move our revenues upwards from there. So one of the things that we should talk about is some investors have expressed interest in purchasing, one of the homes. Perhaps we can just talk a little bit about the individual houses, and perhaps Jason at the end can round up about how investors who are interested in that kind of deal might be able to participate.
Yep. Well, as previously discussed, there's 3 different product types in the development, and they're going to be built over 3 stages. The initial stage contains the A type and the C type, which allows early investors to get in at a cheaper price point in the development. So they're probably early ones to sort of 125 to 135. And the larger homes, the A-type, and I guess a particular design feature I'll point out in those is that they have a main bedroom on the ground floor, as well as 3 extra bedrooms and a multi-purpose room. So each of the townhouse designs has a generous double garage ranging from 37 to 47 square metres, and each has a large balcony ranging from 13.1 to 23.5 square metres. All master bedrooms have a walk-in or walk-through robe, ensuite with double sinks, shower and toilet. Powder room in each with a hand basin. The kitchens all have walk-in pantry. There's plenty of natural light and ventilation, quality luxury fixtures, finishes and appliances. And obviously, as discussed, all villas are elevated with attractive views with a 360 sweeping view around the peninsula.
Sure, and one of the things from our focus groups in relation to those bedrooms on the ground floor is when we're talking about that demographic who will certainly take part of the development, particularly retiring boomers and what have you. A lot of them like that, kind of bungalow type ability to live on one level and then have family members over where they can stay upstairs. But as their mobility kind of decreases a little bit, sometimes they're pretty happy not to go up and down stairs. And what it also means in terms of cleaning the house is, you obviously clean one level on a weekly basis, and the other level as on an as needed basis. But certainly we're targeting the lock up and travel market as well. And I think security is really important for that part of the market, that they can feel assured that they can lock their cars up in the garage, lock the house up, go out through the gated front entry and go and travel and have a degree of surety in relation to the security of their premises when they get home and things like that. So
absolutely, David, and I've tested that as I've said before in the past. We did a development at the Gap in northwest of Brisbane, and we had 3 different design of townhouse, and the one that resonated the most was what we call the pop top, because it was only 3 bedrooms, but the main bedroom was on the lower level, and we found those boomers who were wanting the bolt hole to lock up and travel and leave it, and it's just we got premium prices for them because that design feature was such an important factor to those local buyers.
Sure. And so we should never leave a development opportunity without being upfront about the risks, but also the opportunities, I guess. And we spoke about one of the opportunities in terms of the fact that we've been conservative, we think, in our revenue forecasts. But let's talk about what the risks are. And there are obviously some of those that have been managed. DA risk is always a big one when you start. And so where are we in that DA risk process, and what are the risks left?
From a DA perspective, obviously, we're through that. This is no secret that the project was caught in a planning and environment court battle, as I call it, with the local residents. But council were very supportive of that planning and environment court hearing, and we won, as did council, and council were that supportive of the development that they actually granted us an extra dwelling. So the original DA was 58, and we've now got 59. So just one extra standalone, which is obviously lovely for someone to, because that is really like its own house sitting up there. So look, from a operational works and BA perspective, the risks are low and minimal at this point in time. It's just a matter of getting through the process of the redesign of the civils. And if anyone wants to look online, on the council PD online, there was some incorrect data provided by state government, etc., with the LiDAR, and so the engineers have been busily redesigning the flood storage. And I got some information back from them last week that, because there was a question that was validly asked after the floods of 2022, how far above the maximum flood level do the houses at KYRA sit? And the answer came back that we're about 2.2 metres clear of the Q100, the latest Q100 data, which is the 1 in 100 year flooding for that area. So these are high and dry, and the old saying, if these flood, then Noah will be floating down the environmental corridor in his ark, perhaps.
Yeah, indeed. So, and the normal For those that are the uninitiated in terms of flood, normally you build 500
mil,
500 mil above the flood level, and we're 2.2
Yep.
meters above. So in terms of remaining risks, obviously one of the big ones that remains at the moment is being able to get a builder and get a builder at the price that we want. So we might talk about that a little bit, because that's really probably the one remaining major risk.
Absolutely, and I was going to talk about that next year, being the build factor, and I think we've seen it, and I've seen it myself with my own development up in Albany Creek, that we've been through the rise. It was a 68% rise in build price from the beginning of 2021 until the end of 2022, but things have really plateaued now. So a lot of jobs haven't gone forward, and a lot of houses didn't complete. So the builders are keener, and the suppliers have actually sort of started to bring their rates in. And I think that we're perfectly positioned to take advantage of some competition from the local builders who can obviously build this to the standard that we're seeking to deliver. So
sure. And obviously we've got a good relationship with a number of builders, a couple of builders particularly. One of the things that we do also is work quite closely with our debt funders. We have GPS on the land on this project. They'll be one of the ones that we no doubt go to, but we will also go to some of our other friendly ones that are on some of our other projects that we've got, and to get the best rates. And we work closely with builders that are supported by good funders, and good funders support builders who know that they can do the job. So obviously, one of those that we have got at the moment is on our Albany Creek development, hopefully going into stage 2 in October. And that group is Builder, and they'll be one of the ones we naturally talk to as well. And there are also others that are domiciled on the Gold Coast that we'll be talking to, given the geographic location of this. So we have extraordinarily kind of current pricing with our Albany Creek development, particularly.
Yes.
On product that is it's not similar, but it's not dissimilar. We'll be getting prices over $1 million for some of those ones up there, we think. So there are some similarities in relation to that, and that project's going really well.
And look, Dave, I think the other risk mitigation factor that we've put into play here is staging the development. If someone walked up and said, build me 59 townhouses plus the magnificent recreational facility in one hit, questions might be asked given the supply chain and I guess access to concrete, all those things. But KYRA's staged with 23 in the first stage, including the recreation centre and pool, 14 in stage 2, and then 22 in stage 3. So we've got the ability to sort of stop and start as we gauge the market and other factors that are out there to ensure that we don't get into trouble by seeing a builder fall over or whatever is happening in the marketplace at the time.
Sure. And that is one of the differences between doing a townhouse type development and trying to do 60 apartments on a tower site on the Gold Coast. What we do is stageable. It's saleable in portions easily, and you don't have the same kind of risks that you do in a tower with structure. That's all of the major builders are starting to walk away from now. So larger groups that we might have dealt with in the past on a tower development such as Hutchinson are really pretty well out of that market now, and quite a lot of them have followed. And in fact, you would be worried about a number of those kind of larger mid-tier builders going into the start of a tower, with a 2-year kind of construction timetable. So you might just give me a little bit of a generalization about the construction time frame that these take.
Well, as per the previous comment about staging, the initial early works being the entire civil program, is ideally setting us up to have the entire site shovel ready. So again, another risk diversification measure for the entire project. But I think when you're looking at the staging, it's probably a 2-year time frame from the time we start the civil program to completion and delivery of all 59 houses in KYRA.
Okay. Look, I think that's pretty well done the main set of questions that we have. So I think we've talked about the UN Sustainable Cities and Communities Development Goals for the site. I think one of the things that we're always interested in, particularly things like the provision of solar or allowing our buyers to put solar on. Obviously, things like electric car charging as well are going to be, pretty well de rigueur, I suppose, in developments of this type moving forwards. So perhaps you can comment about some of the little sustainable things actually not in the site as a whole, but in the design that we'll be looking at.
Well, I guess there's stormwater harvesting adjacent to the development there. So all the stormwater from the site itself and from the houses will be harvested and used to, irrigate the common areas for the enjoyment of the residents. So even in, they're talking about El Nino now coming into play. We've had the La Nina, years of rain. Yep. It always dries out there. So we've got the ability to harvest that water and use it to obviously keep the gardens surrounding the estate lush and looking pristine the entire time. And then that's just, the entire development is planned around, this being, environmentally sustainable as part of that. So as I think someone posted the other day, the development's planned for both the people and for nature. And obviously, handing back that 23.8 hectares of land back to council and the locals as open space is all part and parcel of the measures we're taking to make KYRA sustainable.
Okay. Thanks, Brad. That to me seems to kind of cover most of the main points. And I know that Jason will be monitoring some questions from the floor.
Yeah, thank you, Dave. I might just remind everybody, I have got some questions to have been coming through, so we'll go to those in a second. And Dave, I might get you to perhaps just recap the offer itself, but whilst you're doing that, I'm going to run a poll as well, which I'll leave running for everybody. If you want, please do answer that. It'll just run in the background there for you. So pop those in there. That'll just help us to, for my team to be able to reach out to you. Just an FYI, the ECA show day is in Brisbane tomorrow, so we won't be bothering you tomorrow, but we will look to reach out. So if you're in there and you are interested and you want to talk to us about Carrara, then we'll reach out on Thursday, Friday. But if in the meantime, Dave, if you'd like to just perhaps give us a little recap on the offer itself, and if anybody has any questions, we'll come to them immediately after.
Yeah, thanks, Jace. The offer that VentureCrowd has up and running at the moment is for a $6 million equity raise with an offer of D-class units at an issue price of $1 per unit. So an investment in this class of units entitles the investors to 30% of the profit from this project. With our current conservative forecasts of the revenue that we have adopted, at the moment we expect that investment to look at an IRR of about 25.5%. So that's pretty serious, when you consider that although bank rates have jumped from 1%, a term deposit, it probably still has a 4 in front of it in most cases. So, yeah. So that 30% profit at the moment is forecast to be just over $3 million worth to be, divided within this class of units. As Brad said, we're looking to raise this class of units to get through civils and to get our pre-sales and sales campaign for the project started. We we don't think we'll need to raise much more equity after this, depending on how that goes and the level of debt that we can get on this project. And we've been speaking to our funders about that. So that's a bit of a recap of the current offer out there at the moment.
Right. Thank you for that, Dave. We do have some questions, and actually, David, just whilst you were talking about that, Dave, we have David who actually asked the question, what is IRR? The simplest answer to that, David, is it's the internal rate of return. It's like the annualized return. So I think, Dave, you referred to the IRR as 25.5%, I think,
yeah,
which is the forecasted annualized return for your investment.
Yeah, so what that really does is,
return.
Yes, it takes the amount of time that it takes to get that return into the equation. So it's not just a pure return on equity. So if you put $1 in and you get 40 cents, well, $1.40 back, that's a 1.4 return on that. But if you do it over 5 years, it's obviously quite different to doing over 1 year, and that's what IRR effectively measures.
Yeah. Thank you, Dave. There was actually a couple of questions, and Anthony's just asked it. I think he might be having some coverage issues, but it was asked earlier, was the timing. I think, Brad, you covered it before, but just the timing on, so from start, as we raise this $6 million and you get started on civils, how long to the end, and when people start to see their money, their investment return?
2 years from go to O. So
yeah. I guess it'd be good to have a funds manager on here with us right now, but given that it's staged, there could well be a moment in time where, as we get towards the end of the sales are being made and properties are settling, debt is paid back, and then anybody that's, you've got debt and then preference shares, and then everybody in this particular offer is like equity and profit share. As that comes out, they'll start to get paid. So you don't have to wait to the settlement of the last house.
Yeah, correct.
Yeah. Hopefully that makes sense, guys.
That is an important aspect, Jason. The fact that you can retire some debt, and it's probably important that the largest stage is the first stage, being 23, and in some of the most premium product in there. So that will enable us to retire a heap of debts, in that first tranche of settlements after those 23 are completed.
Yeah. Thank you. Chris also asked, how do you know if you're eligible to invest, right? So as I mentioned at the beginning, this offer is for certified wholesale investors or experienced investors. So that means that you either have $2.5 million of gross asset value or $250,000 worth of income over the last financial year, the last 2 financial years. The experienced investor certification, so we can approve you, is based on the amount of experience you have. So if you have experience investing in venture capital or property deals, then we can assess that, and we can approve potentially you to invest in this offer as well. Hopefully that makes sense, Chris.
I think the thing is, you can always, if you're in doubt, you can ring one of the team members and discuss it.
100%. Yeah. Thank you, Dave. Yeah. My team in the capital managers can actually talk through that with you and assess whether or not you would qualify, to save you some time. No problem at all. Anthony's asked if the webinar is recorded. So absolutely, Anthony, it is recorded, and we'll send it out to you. David has asked, where does the equity raise sit within other equity raises on this project? Where does the equity raise sit within other equity raises on this project? So there are no. Dave, do you want to take that?
Well, yeah, there was the first raise that we talked about, and it's attracting an interest rate, so it's a fixed product, and they get no share of the profit. What we're likely to do with any future raises, or if we can raise more debt on the project, is to pay off those, that initial pref equity first. It's attracting an interest rate, and in effect, that would actually increase the profit for those remaining in this particular tranche. So we'll get rid of that, let's call it the expensive equity first, and increase the profit for those that remain.
Yeah. Sorry, I was confused by the question because I don't really think of it as
Well,
equity.
I'm guessing that that's what the investors are after.
That's what I thought. And it's funny because you call it expensive equity, David, but we're actually giving away more in this as profit share on an IRR basis. So it's just it's obviously better for the project and obviously better for the new investors as well. So
Thank you. Paul's actually asked, is your target market for buyers, investors or owner-occupiers?
Absolutely, it's owner-occupiers in the local marketplace. But I've always had a saying in delivering developments, when you're delivering sexy owner-occupier product, the investors will invariably find you. So expat, overseas, well-heeled buyers from Singapore, Hong Kong, the UK, but also southern investors in Sydney and Melbourne who will look at this and go, at 1.5, that's a one-bedroom apartment in Elizabeth Bay these days with no car. It's a pretty attractive investment, and the yields on this product will be circa 5.5% because it will be attracting, I guess, a well-heeled, proper tenant. It's not a townhouse. It's a luxury buyer and a luxury tenant who will rent these things for $1,200 a week or more, given the shortfall in rental accommodation on the Gold Coast.
Yeah, look, it's certainly we will leave no stone unturned for ourselves and our investors to maximise the sales channels and the gross revenue for this product. And Brad and I have had discussions. There's no question that there is a cohort of Chinese buyers looking to move money offshore out of China. It is a well-established pathway to the Gold Coast, and we'll be looking, to see how we maximise, the ability for us to hit those sales channels if that's what we want, and if that's what we think is the best thing, the best thing for the project. I think Brad's quite right. You would never end up with, you're almost certainly never likely to end up with 59 owner occupiers. There's 59. There's usually a bit of a small mix somewhere, but definitely this product is definitely targeted more towards that owner occupier, baby boomer, retirement, southern moving north type buyer, and we think that's where the predominant buyers will come from. Someone who wants to sell a couple of $1 million house in Brisbane, put 500 into super and move down the coast and buy one of these. There'd be a number of people in that demographic as well.
Yeah, thank you, guys. We've actually just had two people ask just in regards to buying the properties and purchase it, whether they're available to purchase off the plan, and who do you talk to purchase the properties. Probably the quick answer is, and I can see that two of our sales team are actually on the webinar tonight. So Bianca and Barbara are here watching, so they'll probably be both very pleased to hear that you'd be interested in that.
Pick me.
We can. They're not available to purchase off the plan today. There's still a little bit of work to do on that, and Brad, feel free to jump in to fill a bit more on that. There's some things to go there, but look, we can reach out to you guys anyway, and feel free to call us on 1300 039 655. And Barbara and Bianca would be more than happy to talk to you, and we can certainly add you to the list as soon as they are ready. You can have a look and see if they're of interest.
Yeah, I think it's a fair thing to say that we will always give our investors a quick first look before it hits the market, so that they get that additional bit of benefit if they do want to invest further by buying something. There's often a few little things that we can do to trim prices compared to what they'll be hitting the market at as well. So as long as you can get your name into the sales team, Brad's already got a little bit of a list. I know that somebody called in last week. Just I'm not sure how they found us, but we're extremely interested in the project. So we'll have a little bundle of names that we can talk to as soon as we're ready, but just before we hit the market.
Yeah, absolutely. Anthony's actually asked, with the building contracts, will you actually be targeting fixed price or variable agreements on the build?
Definitely go for a fixed price contract. And I think, as I said, I touched on earlier, now that the trades and labour rates have plateaued and levelled, builders are much more comfortable in entering into a fixed price contract without the need to have to go back to their developer, and then the developer having to go back to their buyers to ask for more money. That is stopped, and definitely locking in a fixed price contract will be our desired outcome.
Yeah, thanks, Brad. David's actually asked, is a site visit possible? And I would say yes, absolutely. I'd actually love to be able to, perhaps if multiple people want to come and have a look at the site, we can do that. Or David, if you want to reach out again on our phone number, I'm happy to arrange for a site visit, and either one of us will be able to get there for you for sure, and Brad, until we're actually on site. But Brad or myself or one of the sales team, absolutely happy to show you the site.
Yep.
If you drive there yourself, you will probably get some construction fencing at the end of it, but you'll be able to look through that at the site generally. Google View will provide you some. We've got some good aerial images, I think, and in fact, we can provide some drone shots. I'm not sure if they're publicly available, Jace, on our on our website, or a link to it within the product, but.
We definitely have some good some aerial shots, and I was just having a quick, there is one aerial shot on the deal page on our website, but we do have some aerial video footage as well. I might get that added to the deal page. Actually, it's a good point, because it is a good spot, and nothing can quite beat actually walking on the site, to be honest with you. Once you actually walk out on that ridge and you get to see what the view is going to be like, even though in the houses you'll be higher. Brad, probably for you, Brad, are there any other projects like this on the Gold Coast you can speak to?
Look, there's nothing, I guess, as eco-friendly as KYRA or KYRA. There's a lot of townhouse development going on, things like Capri and the Isle of Capri, and their 3 bedrooms start from 1.95. Their 4 bedrooms start from 2.85. Carrara isn't the Isle of Capri, but there's a lot of money in uplift and price, unique in bundle, a few other projects, but nothing that sort of ticks all the boxes like KYRA does, given the expanse of vegetation and open space around it. So,
well, that Isle of Capri development is a very traditional townhouse development. That
it is.
It's expensive. It looks into the back of your neighbours and is set in
in the middle.
Yeah, what looks like a I guess the maze type structure that you normally see townhouses in, around a square with another set of townhouses in the middle, with a road between them, looking at each other with a kind of small common in the middle. This is quite a unique and different proposition.
That's good. That's good.
Hence the pitch that they're luxury houses, not townhouses. So
yeah. How serious do you think the council and state government are about their environmental initiatives, and does this hamper the development timelines, do you think?
Oh, look, they're very serious. Obviously ESG has become the buzzword around the globe, as well as global warming and every other factor that we're looking at here. So yes, it is slowing down progress, and there's a saying in development: you get caught at the front end and you get caught at the back end. And look, we've been caught at the front end. Things have gone slowly because redesign and looking after the vegetation and revegetation zones, but we're getting through it. And the fact that council are supportive of what we're doing at KYRA is a big thing. So our ecologists, landscape designers have got really close relationships with the council staff. And we're constantly keeping in touch with them to advise, how the revegetation is going, and we think that they'll be on side and help us through the process.
It's important to note, I think, that quite a bit of the first tranche of equity has been used to plant out vegetation on the site already. So it's actually kind of the first building works that have been undertaken on the site. So they're obviously not under the building pads and the roads where it'll go, but all around, so that when the houses are built, you're not looking at a couple of small plants with a stake and a blue bit of twine holding them up. You'll be looking at vegetation that has had the benefit of kind of 2 years worth of growth.
Yeah. Thank you. I think you may have kind of. I know you did talk about this. So there was a question about. Can you tell us a little bit more about the revegetation of the land on site? And you kind of, I think you've pretty much answered that, Brad and Dave. Unless there's anything else you wanted to add to that. It's obviously a big part of it, right? It's such a big space, and it's very attractive to have.
Also, I'll probably mention, Jason, is there's the just under 8,000 square metres of covenanted area which forms part of the body corporate to the south of the peninsula, to the right of the entry as you drive in. But then to the north of the estate is all protected, highly environmentally significant vegetation, as well as koala overlay. So there's areas there that just simply cannot be touched. And people have asked, can it be built out in the future? And the answer is no. It's all protected vegetation, and as per the earlier statements, that just under 24 hectares is being handed back to council and the public as open space, never to be developed in the future.
Yeah. Thank you, Brad. Barbara's actually sent in. So Barbara's in our sales. She's our sales manager. Actually, she sent in a message to just to say, feel free to reach out. The email address is actually sales@venturecrowd.com.au, and the phone number that I gave you before is the capital. It's VentureCrowd's main number for our capital management team. But the phone number for the sales team is actually 1300 767 357. And I've kept a record of your names as well, anyway, guys. So I'll pass those on to Bianca and Barbara just so we can keep you guys informed. I'm just looking through the other questions. We've got a little bit of time, but I think we've pretty much covered everything there, guys. That
I see there was a profit share question there. I hope we explained it.
Yeah, I felt you did, Dave. I was going to say the question, but I kind of felt it was a basic explanation of how the profit share is calculated in layman's terms. Somebody saying,
essentially $10 million if you're entitled to 33. Well, no, we're 30, but just 30% of the profit. It's just over 3 million kind of thing. So
yeah. And I think you explained that right. It's not a silly question. I think they were kind of knocking themselves there, being this. I'm of the philosophy there are no silly questions, right? So if you don't understand, it's fine. Somebody else is probably thinking it as well. But hopefully,
there was an alignment question there as well. And obviously, VentureCrowd holds the ordinary shares in this project. So the better that we can do, the more money we make for ourselves in terms of a profit at the end. And we're in on the same basis as investors, in terms of dollar for dollar kind of thing. So the more that we can maximize profit, the more investors get, the more we get.
Yeah. So that goes to the alignment. Yeah, we're aligned in that way. Yeah. Yep. Thank you. The poll is still there, everybody. Just if there's anybody else that would like to answer that. Looks like that's probably all of our questions. Thank you, Brad and Dave. And to all of those that attended. I found it helpful, so hopefully everybody else did. I'll just refer you all back to the website. So again, you can go back to the venturecrowd.com.au page and click on you hover over property and then it says Carrara equity 30% profit share. Click on that. That's the deal page. There's an initial target of 10.4 million, and we're already at 93% subscribed. This offers we've got this aiming to close this in 19 days unless it's fully subscribed beforehand. I mentioned before that we will send a recording out now. If I remember correctly, then Zoom will actually send you a recording within the next 24 hours automatically, but we will send it to you. That'll be Thursday now, given that it's a public holiday for Eka Show Day tomorrow. And again, I mentioned before, please feel free to give us a call on 1300 0396 555, email hello@venturecrowd.com.au, reach out to us via the website if you wish to. Answer the poll now, and we'll reach out for you over the next few days. Anyway, I think with that, and we're just under time, so that's good timing. Thank you, guys. Thanks, Brad. Thank you, David, and thank you everybody for joining us.
Thanks, Jason.
Cool.
Thanks, guys.
Bye now.
Have a great night.